about stocks this week. The Nifty is just shy of 8,000. We'll tell you what your strategy should be. Our investment advisor, Gaurang Shah, will tell you why you should be buying Jubilant FoodWorks for the long term. And Gaurang has made a profit of 87% on his portfolio. How did he do it? Welcome to All About Stocks, a show meant for long-term retail investors. Over the next half hour, we'll tell you how to put together an investment strategy that will help you make the most money over the long term from our stock market. We'll also answer questions you sent in during the week. For those of you who are tuning in for the first time, our email ID is at the bottom of your screen, and you can send in any question that you have about buying stocks. You can also reach me on Twitter at Faye D'Souza. Let me first bring in my colleague Ajay to give us an update on how the markets performed this week while you were in the office. Ajay, take us through it.
Well, Faye, Indian markets are in a strong bull market, and this week's performance was a proof of that. Not only have we added gains on a weekly basis, the August series was a brilliant one. In fact, for the fourth straight series, we've been gaining. Not only that, the August entire month has been a very good one. In fact, we've added about 3%. And for 7 straight months, we've been adding gains. So clearly, we are in a very strong sweet spot right now, and the FI, DI positioning in the market are only increasing with each passing day. In fact, this week we saw many days, though it was a 1 day less trading week, we saw DIs and FIs both were seen buying. The kind of blocks which are also happening were indicative that institutional activity is pretty healthy. Look at the nature of the funds which led to the Nifty almost knocking at the 8,000 level this week. It's the auto space and the oil and gas space. The noises from New Delhi regarding reforms in oil and gas space continue to play a big part in driving the rally. ONGC was the one which was standing out. Several auto stocks were surging to fresh record high. But not only that, if you see, telecom is coming back in style, Bharti and Idea, because of comments from Rahul, the chairman, saying that pricing power seemed to be coming back. Even several of the pharma stocks surged to fresh 52-week high. So it's a broad-based rally. But this week, in particular, it was the large caps which led the up move. Broader markets the performance was pretty sketchy. There were days, good days, and there were bad days, but it was not a synchronized up move. Also, one thing to note is that global cues were extremely supportive this week, and if this is how the trend remains and they don't play any spoil sport, we may be heading higher. Next week, of course, Q1 GDP is something which the street would be reacting to. Not only that, this week, the way India VIX has fallen to lowest level since its inception in 2007 indicates that the caution level among traders is extremely low, and fresh money is being put for work, and we should be heading at higher levels in coming week as per traders.
All right, Ajay, thank you for that update. Joining us today, Gaurang Shah, Vice President at Geojit BNP Paribas. Gaurang, thank you so much for joining us. Very interesting week at the markets, and obviously a lot of analysts now speculating about 8,000 on the Nifty. Tell me this, for a long-term investor right now, from where you're looking at it, what triggers do you think are going to drive the Nifty further from here on?
Well, thanks, Faye. It's always a pleasure to be on your show. Well, when the August series on the FNO started, there was a lot of anticipation that the markets are going to correct, and we could see levels of 7,400, 7,000, 6,800, etc., etc. But we did not go anywhere close to 7,500, and we are very close to 8,000 levels. Now, this is extremely positive for the market, and whatever during this 1 month's time, now that we are into possibly entering the September series, whatever small bits and bits of correction that we saw on the market was always getting bought into. This also spells tremendous amount of confidence. I think the triggers going forward, there are a whole host of them lined up next week. We'll have the IIP and the inflation as well. By month end, you will have the credit policy review by the Reserve Bank of India. And I think in between that, if there is incremental positive news from the government side in terms of policy changes and its implementation going forward, all these things augur well for the market. But having said all that, I feel that possibly in the first or second week of September, you will be trading closer to 8,100, 8,200. That's where we feel that the market could possibly take a pause, correct a little bit in form of profit booking, maybe in form of global geopolitical news flow. I guess that kind of consolidation would be there, but that's given into the market given the fact that you've gone up to this extent. And what I would be advising short-term clients is that close to 81, 8200 on the Nifty spot, if you have parked money and if you are in profits, take some money off the table And for long-term and mid-term investors, the strategy has always been to buy all those dips that is visible into the market.
Well, Gaurang, our market has done exceedingly well over the last 1 year. We're up about 45%. Do you believe that in pockets we're overvalued at this point and perhaps we should stop buying until we see that dip that you just talked about?
Well, first of all, I think when we started the August series, there was a lot of view in the market that we would correct quite sharply, maybe 7,400, 7,000, 6,900 levels were being spoken about. And the fact of the matter is that we have nowhere gone close to 7,500 and we are trading very close to about 8,000 levels. Now this, shows tremendous amount of confidence. On the other side, the flows from the FIs have by and large been quite robust, and that is also auguring well. The result seasons that we have seen and curtains have been in line with expectation by and large, barring some few stocks or sectors. So this correction that I'm speaking about, one should not expect a huge cut into the market. But yes, every dip, I would say, would be an opportunity to go and deploy 25-30% of your investable capital. And on corrections, you can again add on to it. This market, what we've advised to our client for is always a buy on dips market.
Let's talk about a couple of specific sectors, Gaurang. One of the sectors I want to talk to you about is PSU banking. Now, obviously, a lot of the lag in the economy that we saw over the last 2 years is visible on the balance sheets of this bank. But I particularly want to talk about the Prime Minister's new scheme that was announced on Friday evening. Bank accounts for almost every Indian that will come with insurance policies, health, life and accident insurance. How much of it do you think is going to land on the balance sheets of these PSU banks, at least till the end of the year?
Well, I think it is going to augur well. First of all, it is going to augur well for all those, 2/5 of the population were not accessible to the banking accounts, or they do not have bank accounts. They were financially illiterate and untouchable, and as well, Prime Minister put it in absolute words. So I guess it will definitely bring in a lot of hope and stability to all those, individuals who will possibly be having their bank accounts maybe in next couple of months as the scheme gets rolled out and as you see the accounts getting registered and activated. So I think it's going to be a tremendous boost. Secondly, it will get rid of large part of corruption that is there. That's a huge possibility. Thirdly, for the banking sector overall, I think these are going to be not very big ticket accounts. They are going to be very small accounts, smaller size. But it will definitely augur well over a longer period of time when you see wealth getting accumulated in all these respective accounts that have been opened. So I would say that over a longer period it is positive. The fact of the matter will lie in how well does this financial literacy program of the new NDA government led by Mr. Narendra Modi takes into shape. So my guess is that in about 3 to 6 months time, you should possibly have a great visibility in terms of the rollout and implementation and the success of this Jan Dhan Yojana that the Prime Minister has launched. And of course, how well does this augur for the public sector banks who have participated in this scheme? It will take a while, but possibly it is going to augur well.
All right, the other sector I want to talk to you about is the auto sector. That's a sector that's done remarkably well over the last 1 month or so. In fact, it's among the top performing stocks are all nearly auto stocks in the last 1 month. Tell us where you see value in the auto sector and how you see these stocks going forward.
As a brokerage house, we are positive on Tata Motors, M&M and Maruti. That's going to be the order of preference. In the two-wheeler space, if somebody is a little bit risk averse, then Bajaj Auto. Somebody with a little bit of high risk appetite can definitely look at TVS Motors. And having said that, I think next week we'll have the month-on-month auto numbers. I think that's going to be a great soother for the automobile companies.
All right, one more quick question before we move on to the queries sent by our viewers. It is the beginning of the festive season, so happy Ganesh Chaturthi to you, Gaurang. But tell me this, what sort of consumer stocks do you think will do well during this festive season for this year?
Well, first of all, let me also wish you and all your colleagues a very happy Ganesh Chaturthi, and hope that Lord Ganesha brings health more than wealth to all of you all and to all your viewers. My guess is that the consumer durable sector is going to do relatively better. So you have names like Blue Star, Voltas. You have names in the FMCG space, which will possibly start looking a little bit better. So maybe the likes of HUL, Dabur, Marico, etc. would do well. And even as a matter of fact, post the festive season, I think given the kind of optimism on the economy turning around, I think by and large all these consumption driven theme sectors are going to do relatively better.
All right, let's move on to some of the questions that you sent in during the week. Karthik has written in 75 shares of ING Vysya Bank bought at 582. Should he hold on to that stock? The stock ended the week at 627, but there was some disappointment about those numbers. Gaurang, would you recommend he holds on to it, or should he be taking some money off the table at this point?
Well, I think he's in the money, and my advice would be to take money off the table. And this on and off lips with ING Vysya Bank has been there. It is not only this time around. I think in the previous quarters as well, there has been some disappointment. So if you really want to be staying invested in the banking sector, then private sector banks, names like IndusInd Bank definitely augurs well. As a disclosure, we do have a positive coverage, great set of numbers. And if you're talking about recovery in the commercial vehicle segment, this particular bank has a large portion of its loan book to this particular sector, commercial vehicle segment sector, that is. So I would say, book out from ING Vysya Bank, buy into IndusInd Bank, and look for a target of 685, a conservative target. We could possibly revise it upwards depending upon the performance.
Well, KR Gandhi has written in 500 shares of IDBI Bank bought at 111 rupees. Should he hold on to that stock? Now, Gaurang, we've been hearing from this bank about a turnaround, about plans for new branches, about rebalancing its portfolio, de-risking the business. Are you impressed with anything you've heard so far? Do you think it makes sense to hold on to this stock?
In fact, amongst the private sector banks, there is one bank that I have been advising to avoid, highly avoid, if I can put it that way. And all these smooth and good talks are only on the paper, but in terms of implementation and ground reality is virtually zero for IDBI Bank. So my guess is that, and it's been a terrible underperformer, let's face it. So why stay invested in a bank which has been underperforming, though it is from the private sector? Go into Axis Bank. The stock has gone ex-split, trading just below 400 rupees if I'm not mistaken. Leading private sector bank after ICICI Bank, great opportunity in terms of growth visibility, a great performance quarter on quarter. We are looking at a very conservative target of 545 on Axis Bank with a 1-year time horizon. So I would say sell off IDBI Bank. You may be on a loss, but book that loss. You will definitely make profits in Axis Bank that will set off your losses.
All right, and this is why we take his advice so seriously. I'm going to take a look at Gaurang's own portfolio. Now, for those of you who don't know, Gaurang designed a portfolio on this show on the 14th of December 2012, and we've been tracking it ever since. It's now at an overall gain of 87%. It's beaten the Nifty very, very handsomely. I'm going to give you a list of stocks in this portfolio right now. There's IndusInd Bank, Sun Pharma, Godrej Consumer Products, Havells, Mahindra & Mahindra, Wockhardt, Mindtree is up 224% since we bought it. Apollo Hospitals, Eicher Motors up 100%, and Infosys. Gaurang, thank you for this wonderful portfolio. Like we were talking about earlier on the show, do you think it's time to maybe book some profits on this portfolio? Mindtree, for example, up over 200%. Do you want to continue to hold it?
So surprisingly fair, most of the stocks that I have in my portfolio are just getting re-rated by larger, players. So I think there is a lot more in the stock, though, I'm making a profit of almost 87% overall on the portfolio, maybe 100%, 150% plus on some of the stocks that I've bought. But most of the stocks have got re-rated upwards. So I don't think I should be in a hurry to book in any of them. And if I look at the financial performance of most of these companies that I have in my portfolio, they are par excellence, and there is only opportunity to go higher from here where they are. So I would just hold on for it for maybe a couple of more months.
All right, hold on to all of these stocks. For those of you who want to write it down, here's a recap. IndusInd Bank, Sun Pharma, Godrej Consumer Products, Havells, M&M, Wockhardt, Mindtree, Apollo Hospitals, Eicher Motors and Infosys. If you have any questions about that portfolio, feel free to write to us. Our email ID is on your screen right now. When we come back, Gaurang will bring us a new recommendation for this week. Don't go anywhere. Welcome back. You're watching All About Stocks in ET now. Thank you for staying with us. Gaurang Shah is still with us, helping us pick stocks for our long-term portfolios. I'm going to take a look at Gaurang's report card. Gaurang, you recommended Bajaj Auto when it was trading at 1920. in January this year with a target of 2,300. That stock is currently at 2,258. It hit the target and it's been trending downwards a little bit. What would you recommend we do for those of us who picked up the stock on your recommendation? Should we continue to hold it?
I would definitely advise to hold on. I'll revise my target fare to 2,450. This on fallback of the expectation of recovery in the two-wheeler pack. This on fallback of the great numbers that the company has been reporting, both say month-on-month sales numbers as well as quarter-on-quarter numbers. And of course, if you're expecting the run rate of these month-on-month numbers to improve going forward from here on, then I think for a company like Bajaj Auto, there is tremendous amount of scope going forward from here. There are lots of launches lined up by this particular company, both at entry level and higher level, two-wheeler models that they manufacture. And it is also a play on the export side. It is also a play on the three-wheeler side. So I would say don't be in a hurry to book out of Bajaj Auto. 2,450, we might have a relook at it.
All right, so stay with Bajaj Auto and let me tell you what Gaurang's recommendation for this week is. It's Jubilant FoodWorks. Now, Jubilant FoodWorks ended the week at 1296. Gaurang, most retail investors remember this company from its IPO because it was so exciting and it was so new to all of us. It didn't really give us the kind of returns we were expecting at that IPO time, and ever since, its profits were not impressive when the numbers came out. It's dealing with inflation, and of course, when consumer sentiment is weak and people don't really want to spend a lot of money, they don't eat pizza. So what do you think is going to change for this company in order for it to hit the targets that you think it's going to hit?
Well, firstly, I think there was no peer comparison for this particular company when it got listed. Of course, post that we have specialty restaurants and likewise. This particular stock I have been tracking from the time it got listed, and I have been extremely positive on this particular counter. Though you may say that the numbers for the last 1 or 2 quarters have been a little bit dismal, given that the same store sales growth rate has been a little bit disappointing than what it was earlier. But if I look at the plans of the company to open up new branches, to add new products, Dunkin' Donuts, which was an investment which was likely to churn a little bit of more positivities in terms of bottom line, has taken a little bit of while. But my guess is that over the next 2 or 3 quarters, you should definitely see contribution coming through. Yes, a lot of people don't eat pizza, fair, you are right on that. But if I look at the possibility of inflation coming down, thereby the margins of this company could definitely expand to the higher side. And of course, with the reach by opening up new stores into tier 2, tier 3 and maybe semi-urban areas, I think there's going to be tremendous amount of scope for this company to maybe make good from the new stores that they will open compared to the old stores that they have. So I'm not too worried about the inflation eating into the profitable margins of this particular company. It's maybe a short-term negativity or a mid-term negativity, but over a longer period of time, what we have witnessed, and the history is witness to this way, that they are able to pass on all the inflationary pressures related to the food articles to the end consumer, thereby maintaining the margin. So maybe 1 or 2 quarters would be under pressure, but longer term it is definitely positive. I'm working with a very conservative target of 1,425 on this. If we have a steady performance by the company, inflationary pressures come down, we could revise it upwards. But for that, I think it is very crucial for the company to take off levels of 13.25, which is proving to be a little bit of hurdle.
I have a very quick question for you. For anybody who's designing a portfolio right now, if I'm looking for a stock that will recover when sentiment recovers, when inflation comes down, when the RBI cuts rates, when all of those things turn around, wouldn't I be better off in an Axis Bank or maybe an SBI or something that's more linked directly to the economy than something like a Jubilant FoodWorks? And in that case, should those be my core holding, and should Jubilant FoodWorks then be the beta holding that's maybe 10% or 5% of my portfolio, maybe even less?
I think that could be a fantastic strategy, because this kind of companies are definitely good proxies to inflation coming down, interest rates coming down, and of course, like you rightly mentioned, I think the greatest beneficiary of inflation coming down and interest rates coming down is going to be the banking and the interest sensitive sector fare, and they are going to be performing much better compared to these proxies that we have. But this is an investment idea that we are talking about. So I would say that, yeah, maybe you can allocate the 10, 15, 20% to Jubilant FoodWorks in your portfolio, depending upon your risk appetite.
All right, so Jubilant FoodWorks is Gaurang's recommendation for this week. Remember, I gave you a report card of how well his previous recommendations are done. So that's why you should take it seriously. Let's take a few questions. Woman investor, that always makes me happy. Swati has written in, she has 60 shares of Torrent Pharma, which she bought at 468 rupees. She wants to know if she should hold on to that stock. The stock ended the week at 832. Lots of interesting movements within the pharma sector, Gaurang, especially with Torrent Pharma. Can she hope for more than double her money from this stock?
Well, I think there is always more to be made in the stock market if you are holding on to the right sector and the right stock fare. And that's why my portfolio is also performing so well. And that's why I'm holding on to it. In Torrent Pharma, I think this is one of the mid-cap pharma companies which were off the radar of larger players and even small players as a matter of fact. But given the kind of consistent performance that the company has delivered, I think if she is not in a hurry, she should hold on to it. I think the immediate target one could look for is about 885. Possibly you can have a review over there.
All right, before we run out of time, Sanjay Gupta has also written in 85 shares of CEAT, which he bought at 600 rupees. Should he hold on to that stock, Gaurang?
I'm extremely optimistic about the auto sector, and I'm equally optimistic about the auto ancillary. Now, if we are talking about recovery, four-wheeler, two-wheeler, heavy commercial, light commercial vehicles, multi-axle transport vehicles, etc., they are definitely going to requiring tires for their vehicles that they manufacture. Plus, you have a trigger in terms of replacement market, which again, CEAT has a good, decent, sizable amount of market share. So I would say hold on to it, don't be in a hurry. A conservative 645 targets from a 6 to 8 months time horizon cannot be ruled out.
All right, next question. Bala Kumar has written in, he has Kane, which he bought at 337, and Sri Renuka Sugars, which he bought at 22. Let's talk about Kane first. Should he hold on to that stock?
Definitely hold on. It is one of the stocks in the exploration side that we are positive on amongst the private players. A little bit of concern in terms of numbers and of course the loan that the company gave to the parent Vedanta. But extreme positivities in terms of in principle approval coming through from the oil ministry to produce more number of crude oil barrels per day. They have also struck gas in the Rajasthan block that they are operating in. This also augurs well for the company. I think 385 should be the target on Kane India. Again, a very conservative target.
Gaurang, he also has Renuka Sugars, which he bought at 22 rupees. And the thing that makes me slightly nervous about this entire sector is the level of policy interference or the policy influence it has. We know import duty on sugar has just been raised by the government as well. Is this a good sector for a retail investor to be in?
Honestly speaking, I think sugar tastes sweet when you actually taste it. But if you invest in it, I think it's going to leave you with a terrible sour taste in your mouth. So I have never advised people to buy into sugar sector, and given the kind of government policies and flip-flops that keeps on happening, I think one needs to be extremely cautious. There are, off and on triggers in terms of ethanol blending into petroleum products, etc., but they really don't, that's not the really mainstream business for these companies. So I would say book out of Sri Renuka Sugar. If you're looking at something in the double digit, then as a disclosure, Dish TV is something we are positive on. A conservative target is 75 is what we are working out. But again, the entire digitization process, rolling out DTH segment, direct to home, unorganized players, there could be a short-term negativity. Longer term, I think if things evolve as per the expectation, I think 75 should be the target on Dish TV. So I would say switch out from Sri Renuka and buy into a Dish TV.
All right, switch out from Sri Renuka, buy into Dish TV. We'll take a look at one portfolio. Now, every week we pick one lucky viewer and we look at your entire portfolio. This week, that viewer is Rajat. Rajat has sent in a list of stocks. Gaurang, right on top, Ipca Labs at 700 rupees. Got in slightly high on Ipca Labs. What can he expect going forward?
Slightly higher because there was some amount of negative news flow on the counter, but I'm quite optimistic that it will recover. I think your target should be 835 on it.
50 shares of Tech Mahindra at 2100. That stock ended the week at 2363. You've been positive on Tech Mahindra for a while, haven't you?
Yeah, I have been, but unfortunately I have not bought into my portfolio. Maybe next time around when we speak and do a review of my portfolio, I would possibly switch into it. I hope it does not run away by that time. As a disclosure, a positive coverage and the fantastic performance the company is delivering, 2,450 should be the target.
He also has Yes Bank, which he bought at 377 rupees. He's making a nice profit on Yes Bank right now. Hold on to Yes Bank as well?
Yes, some amount of negativity in terms of boardroom fights, but given the performance, 635 should be the target on Yes Bank.
Interesting pick next, 110 shares of Diwan Housing Finance bought at 272 rupees. Now that stock ended the week around about 356, and we know that its home loan book has been growing exponentially. What are your expectations from this stock going forward?
I think this growth is only going to multiply going forward from here on, and like we were discussing, if interest rates have to come down, I think the direct beneficiary is going to be banks and NBFCs and housing finance companies like Diwan Housing. Maybe about 3 to 6 months target should be 385, but again, don't be in a hurry to sell it at those levels. It could possibly be heading higher.
All right, last stock on his list. He has 90 shares of Crompton Greaves, which he bought at 200 rupees. He's losing a little bit of money, not a lot. When do you expect Crompton Greaves to start showing him a return?
Yeah, definitely hold on. 200 rupees if you bought it. If it comes closer to 175, 180, if you have investable amount, you can add more. I think the numbers this time around was a little bit disappointment in terms of overseas operation. As a disclosure, amongst the mid-cap ideas, Crompton Greaves has been one of our top picks, and we expect a target of 245 with a 1-year time horizon.
All right, now that brings us to the end of All About Stocks this week. Gaurang, thank you so much for answering all of our questions. It's such a pleasure to have you on the show. It's such a pleasure, of course, to get all of those recommendations. Now, if you have questions for Gaurang or for us about stocks, feel free to write to us. Our email ID is on your screen. A copy of this show will be available on our Facebook page, and you can reach me personally on Twitter and give me your feedback. Thanks for watching.